Hey, good morning, Bob, Trade Genius, the 17th of February. And I want to go ahead and go through some charts here. And as I said last week, once Bitcoin broke out of this falling wedge, and for your trading notes, a falling wedge is one of the most bullish type of technical patterns to trade. And for two reasons. One, if it breaks up out of it, you draw a parallel line, and usually that's where prices will go. If it breaks down, then you know you have a pretty good short because it's the failure is catastrophic, and so usually people have stops underneath these wedges. And so Bitcoin did as what we expected, and we had a buy signal, and now 11.3 area. And if you look now here, this is the low volume area. There's another thing you want to put in your trading notes is that you see these high volume areas, and you see these low volume areas. The price tends to want to move from high to low and fill that spot. There was enough action there, and price tends to move towards it. So I would not be surprised at all. There might be some congestion here, and if it pulls it back down, you're probably looking back at $8,700. If it breaks through, you're looking at probably 12.3 to 12.5, and then we just have to restart redrawing some lines here because things have changed. I just use my buy and sell signal, but I like to know where I am on the map. But money flow is definitely has been picking up, and what we really want is to get this line back over into the above 60, and that's kind of a bull area that's usually consolidating it on high, and that there's accumulation, but we'll take what we can get. This is a 80+% move, while the stock market went down, net of 5%. So cryptos are a safe haven. I like to trade on the hourly anyway, and it's just been really a smooth move here, and you know, you're going to catch the moves, and most importantly, it keeps you out of trouble on the downstrokes. But the trades I've been working on primarily is because I like the volatility a little bit better. Is that we caught this move in Litecoin here, and it got to 209. I stepped away from it because I thought, now that airdrop and the forking and all this other stuff going on, all that news is played out, I think we're going to consolidate for a little bit. And I jumped over to my other trading vessel, which is Ripple, and caught this move, and then I caught this move too, and I had a stop at 120 overnight, and I came back and saw that I was back all in cash. This looks good too. I'll probably buy the next buy signal on this, and we'll see where it goes. Also, I have an alert set on Monero too. I didn't trade it, but I'm starting to follow it. A lot of people like it. It's been trending up beautifully too. You got a buy signal on it here, and just to remind you that if you set a V stop in, you don't have to necessarily follow the sell stop. If it's trending up, you don't have to chop yourself in and out. You can take the first buy signal and just run it up until a volatility stop or a parabolic SAR stop, takes you out, or you can even use channels if you want. But Monero is moving nicely too. They tend to, of late, been moving together all these coins, so it seems to be starting to move more as an asset class. But I think once Bitcoin breaks out of its downtrend, then I think a lot of money's just going to hop on the Bitcoin Express. So we'll just take it a day at a time on the cryptos. So you can see Ethereum the same way. And now flipping over to I'll flip over to the 30-minute chart here, and I'm going to show you SPY, because I have got buy sell signals set up for SPY too. I like to, now that XIV is gone, day trading SDS and SSO, and so I'm trying to understand where I am in the picture here. We had this huge just fall off a cliff here. I've been watching the fibs on this, and it broke down, and we're not out of the woods yet. This is it's being stopped here at the 61.8 retracement area. Now if it breaks above this 275 on a closing basis, then we're going back to the, likely go back to at least 281, 282, and maybe take a run for the highs. If not, my suspicion is we're going to come back down and we're going to test this low again, and even test even lower. So the reason why I use different time frames is it's really based on volatility. So and so the ETF charts tend to work better on 30 minutes, and the cryptos tend to work better on hourly. And you just have to watch volatility to see whether or not it determination for you to be able to switch time frames. These are just tools that we use, and so anyway, I took a short here, and then I added to some puts I had on SPY, and I'm expecting it to come back down probably into this area, and then we'll see where it goes. The Chinese are coming back, the Asians are coming back. They absolutely crushed. They absolutely crushed the yen short trade. Look at this; it's amazing. Look at the stair step on this. This is choking the Japanese exports, and they're not going to really stand for it. Here's FXE, and that's starting to break down now. So you're going to see a concerted effort to try to lift the dollar, and see, starting to see it come up here last well, actually just it was from Thursday night into the weekend, and that's why you start to see the market a little bit softer. So just keep an eye on that, and that's going to cause some softness in oil. Okay, oil's the same way. It's bumping the channel, got a sell signal, and I played this thing short here. I've been waiting for it to come back up again here. Can it get to here? Maybe, but we're out of the channel. I got a sell signal. I'll probably buy puts again on it next week and have it come back down. And then looking at gold, okay, gold's going to react to the dollar, so I wouldn't be surprised to see gold push back down, and then but that push back down is going to absolutely be the move that will probably launch from. And then what else do I want to show you? Let me show you the bonds. So TLT, when this is falling, rates are going up, and this is now big consolidation here. They're not. There's a lot of resistance at 2.8 and 3% for the 10-year, and if it gets higher than that, I think it just blows our economy up, because just the debt saturation. But my view is that I think we're going to run right back up, and we're going to run back into these low volume areas here. And if you look at TNX, see the same thing. They're having a hard time getting over here, and I think this is going to push down too. I think the Asians are going to buy our bonds again, and we're going to move back into bonds. The stock market's going to roll over again, and then we're going to see a lot of this get retraced. So if you're wanting to buy a home, or you're trying to refinance, you give it 30 to 45 days, and you'll have another shot at it here before they try to lift rates up again. But you got to remember, if the Federal Reserve keeps raising the short interest rates, it doesn't mean the whole, what they call the curve, from 30 days to 30 years, doesn't move in lockstep. People intuitively sense that when you raise short-term rates, you're choking off the economy, and it usually brings the longer rates back down. And then when that curve gets flat or it gets inverted, where the short rates are more expensive than the long rates, that's usually when you go into recession. And we're getting pretty close there. That curve is flattening out very quickly. So anyway, just so I share that with you, I'll do a few more charts this weekend. We have Monday off, and my view is that I think the Chinese are back. They're gonna change some things. It looks like they're already making some decisions and been buying into the cryptos, and you're gonna see them buying into the dollar. And I think we'll see dollar weakness, commodity weakness, and crypto strength and bond strength. So anyway, thanks for listening. I'll catch you guys later. Bye bye.